All right, I've welcome back for the episode of This Week in Charts via Carnivore Trades and Wall Street from Main Street. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon, or come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it this week. So spiders actually managed to carve out a gain this week, although we did have a pretty sharp reversal on Wednesday after the FOMC. So essentially Fed raising by 25 basis points as expected. It was really Yellen, not Powell, that kind of tanked the markets in the afternoon. So we had a very volatile session here. We initially went higher. Powell actually came out kind of somewhat dovish, believe it or not. He did say that they had no plans to cut rates, so that brought the market in a little bit. And then it was Yellen saying that they weren't going to fully insure depositors, and obviously she contradicted herself the very next day. But we did have a pretty sharp reversal on Wednesday. And right now we're inside of that. So right now, basically, it's kind of a split tape here because you had a nice rally on Friday, but I'm going to go off the weekly here, and I'm going to say bears have control until proven otherwise. So you have a big reversal bar there, and then now you have an upsloping trend line that's been back tested twice, and as well as this downsloping trend line that's also been tested, and we've come off of that. Now, the reason I'm going to say it's a little bit more neutral is because bulls did have a pretty good rally on Friday. So we gapped down Friday morning. There's more concerns about Deutsche Bank, which I'll get into in a minute. But we gapped down and we kind of chopped around. And then the markets were, basically, defended at this level. So we had a nice rally off of that. And we, pretty much closed strong into the end of the day. The only difference is we never, we did get above that 50-week moving average. We didn't get above the 20-week moving average. So again, it's kind of split here, but until proven otherwise, we still have a big red bar there on the weekly. And believe it or not, on the daily, we're inside of this red bar as well. So, nothing to say like, hey, Monday, Tuesday, if we just go sideways, you could make a case you now have a down move and a bearish inside bar. I'm still in the camp that we got to go down and test this pivot here. So that should take you down to, 383, 385. It's also going to be one more hit of this downsloping trend line. So right now, until proven otherwise, if you get above this pivot here, 402.49, that is going to be, resistance. So we'll see what we do this week here. But until we get above that, I do favor a little bit more of a pullback into this level here. As far as the triple Qs here, they're still acting as somewhat of a safe haven. So again, we're seeing this, big up move and then kind of a pullback, and it actually made higher highs here. So if this can consolidate sideways, you can move up to 320. There's going to be a lot of resistance up there. That's that August 26th pivot. Then you have this previous red bar, that sell-off bar above that. So I don't see, even right now, I don't see a ton of upside in the Qs. If they do, bid higher, this is probably where we're going to look here. But we need to do some consolidation. And right now, again, with the spiders, that is the lead chart to look at. And if this pulls back, then obviously the Qs are going to pull back. But again, they may pull back, let's say, lesser so than the spiders, right? People are kind of flooding into big tech right now, and that's been the trend lately. Is they can't really flow into banks. So, anyways, over to the IWM. So the Russell 2000. Again, we talked about this kind of daily chart bear pattern, this choppiness here. It started to break down on Thursday. Had some momentum after the FOMC, and then on Friday we had a nice reversal. So again, we basically went into the October lows, right? Very close. So just 2 weeks of consolidation isn't really enough to break a big level like that. And so that's why you saw a nice reversal off of that level. So I would say the Russell may have put in a near-term bottom here. I'd say the downside right now, if any, is going to be more towards the Qs, or excuse me, more towards the Qs and the spiders here. The Russell, a lot of the downside's been pulled forward already, right? A lot of those regional banks are in the Russell, and obviously a lot of that is starting to get priced in now. So, but Russell 2000 coming off the lows here. We'll see if it can go up and back check that 20 moving average. There's a gap fill up at 181 and that 200 MA there. So those are levels to watch on the upside. Again, if the spiders continue to pull back, it may just be that the Russell kind of grinds in this area here for a little bit. Same thing kind of with the Dow. Dow actually having a little bit of a higher low here, acting a little bit more risk off as it traditionally does, although it hasn't in the first quarter of the year, but now starting to act a little bit more risk off as we do have that higher low in place now. Again, we're watching that trend line, which goes back to the all-time highs. We got a bid off of that, but remember, we have lower highs now on the Dow. There's 1, 2, 3, 4, potentially 5 lower highs. So eventually, this trend line's not going to hold anymore. We have declining momentum here, but for now, can't rule out a back test of 330, maybe 331 again. That purple line there has been a pivot point for quite some time there on the Dow, so that's a possible level to watch for there on the DIA. Anyways, so everybody's looking at what the next shoe to drop could be here for this market. Again, right now, I think the market's kind of calmed down a little bit, but down the line, obviously Deutsche Bank is a concern. So for let me just pull this up here. So for Deutsche Bank, and Capital One, Ally, Schwab, look at their credit default swaps here. This is on Charles Schwab, but Deutsche Bank is exploding as well. These are possibilities here. If we look at, just a chart of Schwab, just to put that into perspective. Obviously, just this is a 1-year chart here. That's, a pretty good sell. But if you look on a weekly or even a monthly, a 20-year chart, that's a really good haircut. You're talking about 75 to 45 in 1 month here. You're basically testing levels that you haven't been to since, 2020. And this was an area that took you like 3 years to break out of. And we got back down to that in pretty much just 1 month. So pretty... definitely interesting times here. Everyone's kind of aware of this right now. I think, however, something that's starting to come down the pipe a little bit here that hasn't been talked about a lot is commercial real estate. So we now have, I believe, 1.5 trillion in, and this is from Scott Reckler. There's 1.5 trillion in commercial real estate that's rolling over in the next 3 years. And a lot of this is obviously financed when rates were, the full-on blast-off QE, environment. And now we're in an environment where, credit's a lot harder to come by. So this is going to be a problem for banks' balance sheets. And again, we talked about this for a long time. This is what the inverted yield curve does. And there's always those jerks out there that say, oh, this time it's different. This time it's different. Just go ahead and buy. Nothing's bad's going to happen. We're not going into recession. But, it always ends up playing out this way. So possible next shoe to drop here. I don't know if it's going to happen right away. But these are things that, financials connect to everything. So if there's problems there, there's going to be, cockroaches everywhere. So just something to keep an eye on there as far as, headlines that may come in down the pipe over the next couple of months. Anyways, let's get over here to some sectors. As always, let's start off with the semiconductors here. So semis, SMH here, pulling off the highs. They were actually red on Friday, and that was a little bit of a red flag to me. So generally, maybe not a red flag, but it definitely tipped my antennas off a little bit. So we had an impressive reversal on the spiders, right? So up 66 bips, and then the Qs up 37 on Friday. And the semis have been leading lately. Everybody's been talking about NVIDIA. NVIDIA is just a powerhouse. AMD, these stocks are way overbought here, but they've been a powerhouse. And the semis were actually red on Friday, so maybe a little bit of a changing character. Not sure what to make out of it here. It's just one day. I will say I don't see a ton of upside on the semis. I've talked about this pretty much ad nauseum this week on my channel. You take a look at the weekly here, you're going into a 618. Actually, you hit that this week and we pulled back. But take a look at what you're going into. So you look at all this chop here. That was a previous bear flag. This was like your secondary distribution phase in 2022. Look at the volume. There's lots of sellers there. And look at how we're going up. We have a little bull flag here on the weekly, but we're going up on very light volume. These buyers are going to turn into sellers when this hits here. So I don't see a lot of upside on the semis. Additionally, I'm watching this kind of big rising wedge here. You get back into this lower trend line, and if, like hypothetically, let's say hypothetically we get back into this lower trend line and we go back up. If we can't make a higher high, or even if we do make a higher high, I don't see a lot of upside here. And this is a bearish wedge here. So it's going to tighten as we get closer, throughout the month of April into May. So we'll be watching that on the SMH. Again, I just don't see a ton of upside here for the semis, and semis are connected to everything as well. They're in everything, and that's why I always look to them as a leading indicator. So we'll be watching that very closely over the next couple of weeks here. Over to cloud software, IGV is still holding up. Can't say anything bad about it. We had a nice reversal on Wednesday, but you know, if this consolidates, this can go up higher. It does have a gap at 295.43 and at 297.26. So possible upside targets there. And then of course your double top. And then of course this big gap here, and that would be a slight nominal high there for the IGV. But there's lots of resistance up there. But you know, we'll give them the benefit of the doubt right now. Cloud is holding up okay. One sector it's not holding up okay is the transports. And we've talked about this a lot here on this channel as well. You know, again, last week we had that failed inside bar. You broke below that big power move. And I said, look, the transports are weak here. It's not a good sign. We did, you know, they did get defended on Friday. So we had a down move. We were starting to put in bearish consolidation, but there's a lot of demand here. This is where, you know, you reversed after that sell-off. So generally when you test that, there's going to be buyers at least the first time. But if you come up and you put in a lower high, then it can break. But for right now, the transports got defended. But overall, big picture on the weekly, I never like it when you lose a big power bar like that on a weekly close. It's definitely a sign of weakness. Anyways, over to bonds here. So let's take a look at the ZT, the 2-year first. Again, you do have, you know, 1, 2, 3 higher highs here. It's getting a little overbought. Again, kind of like some other things, I just don't see a ton of upside. This is an area here, which was a bear flag, and you broke below that, and now it's getting back tested. We'll give it the benefit of the doubt. It's had a 1, 2, 3 power move off of the lows. So and generally after you have a 3-bar surge like that, you get a pullback, and again, you are into resistance. So right now, I don't see a lot of upside in bonds. There's the 10-year there as well. It did close above the 50-week moving average, but again, you're going into, you know, this big level. So let's draw that in right there. There's your pivot. You kind of broke below it, tested it again, and then you broke through it. So that should be resistance here again going into next week. And then there's the ZB as well. You got back above this pivot, and then you've got these ones, or you know, this one, and then these smaller ones right here, kind of the opening candle, the closing candle there, a little bit of a wick right there, and it closed right on that 50 moving average. So a lot of resistance in this zone. Again, if this consolidates, then it can get through that. But right now, near term, I'm just not seeing a lot of upside for bonds. Let's get over to housing here. So XHB, again, a weaker sector this week. Again, it got defended on Friday, held that 100 moving average. But again, you still have big picture, a move down, sideways to up consolidation. So a bear flag, again, move down again, sideways consolidation. So this is still bear flagging here, and you can see the same thing really on the ITB, you know, just a down move and a big bear base here building up on the weekly. The VNQ, you know, a lot of my members are actually short the real estate via the SRS. It's 2 times short the VNQ, and they've been killing it lately off of this equity here. But it is getting defended again. I think we talked about this last week. You know, you're getting close to the October lows. So this is, you know, probably a zone where the buyers at least step in, shorts probably cover. But last week, down move, big red bar inside of that, and we got continuation here. I think this may have put in a short-term low, though. It's a pretty good power reversal with some good volume on Friday. So near-term resistance will be at the 20, and then, of course, that $84 handle, which has been a good pivot point over the last 6 months or so. But that will be your resistance there on the VNQ on the upside. All right, over to XLF here. So we briefly talked about financials a little bit, but again, you've seen the XLF kind of looks like the transports, kind of looks like the Russell, right? So that big outside, you know, kind of gap down on Friday, and then a green close. The XLF didn't close green, but, you know, it came off the lows, so we'll give it the benefit of the doubt. But you went into this big green bar, and again, that was the October lows. Good volume there. Buyers should defend that. If we look on a monthly, this was also a previous, you know, multi-year high that's getting tested one more time. So good support in this area. It's oversold. We'll see if it can get up to 32.25 over the next week or so. That would be kind of your bounce level. I think maybe you have a near-term low kind of in some of these financials, specifically like KRE, the regional banks. Again, we tested that double bottom on Friday, and we had a nice reversal. So upside could probably take you to 48. You know, the 20 MA is going to be good resistance there in the near term. I don't see a ton of upside outside of that right now. I don't really see a lot of downside here in the near. Eventually, these are going to go lower. Right now, I think a lot of that has been priced in to a degree. And again, like the Fed's kind of ahead of this with their swap lines and so on and so forth. But there will be more problems down the line, make no mistake. But for right now, I do think there is probably a short-term low. I'm just not sure how much upside is really in it at this time. All right, let's shift gears over to energy here. So on to crude. Again, continuing to kind of bounce off that 65 handle, and then a little bit of sideways chop here on Friday. Nice test candle there. I think this is probably going to put in an ABC up. After that, I'm not sure how much upside is left. I know we hit that 200-week moving average there, but again, like I said last week, there's a big bear base here. So when you break through, that base after consolidating, it's going to have velocity behind it, and it's going to make the levels beneath it more minor. Doesn't mean it can't hold. I mean, who knows? Maybe this is the low. It could be. I can't say that it can't be. But probabilities dictate that there's more downside here. Now, I'm not saying you can't get a short-term bounce, but I think the level here, like I've said to you guys, is between 50 and 60. That's where you want to accumulate this. I think it has one more drop. We talked about this at the beginning of the year as well. Kind of looking for pressure here in kind of crude towards the first half of the year. And then once that is kind of played out, we'll look for a bottom here. So again, I'm not bullish on it just yet. But we'll be watching in that area here again, just near to medium term. I think it has to make one more low there for crude futures. Anyways, let's get over to XLE here. So it's holding that trend line for now. Again, we talked about this for a long time. Been watching this trend line really been since like late last year, and it finally got hit, and it's getting defended. So we'll give it the benefit of the doubt for now. Near term, your upside is to 82.72, 82.75. 200-day moving average in that area. If this trend line breaks, then you're going down to 70 and then possibly down to that double bottom at 65. I'd love to get some of these stocks down there in that range. XOP here, again, we talked about that trend line. Again, down move, high, higher low, higher high, one more higher low, and then lower high. So again, we noted that momentum's declining. This trend line was probably going to break, and it did here. You do have a slight higher low on the daily. Ultimately, though, I think this may go back test 100. I think that's a very good level of support. That's your green bar, previous high. So that's an interesting level if it can get down there. I'm not sure it does, but that is where you want to look for it. And OIH finally got to my 250 level. Been talking about that for a long time here. Just ignore this kind of broadening pattern there. But basically hit that level here, and then we got a nice bounce off of that. So we'll see near term 200 MA. If you can get back above that, then 280 and that gap fill there. This is still a little oversold here on the daily time frame for what that's worth. Anyways, over to Natty here. I believe this is still trying to carve out a bottom, and sometimes when you have these big monthly time frame patterns, they take time to play out. It's just the nature of it. But you can see here, this level has been a floor for the last 11 years. And what you have here is a big tail candle after a major sell-off with volume. So right now, the way I'm looking at it is, and the last time you had this happen was in 2015, and then we had that retrace, and it went up to, well, it basically doubled, and actually more than doubled there. And you had a nice tail candle here in 2012, and you had a V shape. I'm of the opinion that this here is just a classic retrace after a major bottom is being put in. I think you're getting a second chance to accumulate it here. And it very much reminds me of a chart of Newmont. This is a chart that I was long last year, and it was off of a monthly time frame. And I was long with my members here on this pivot and this pivot. And, everybody was kind of looking at the daily chart saying, oh, Newmont's not doing anything. It's just flagging. It's setting up to go lower. And it started to break down right here, and it failed. And it ended up gaining like 30 or 40% over the next couple of months. Sometimes when you have these monthly chart patterns, they take time because it's on a monthly chart. But you can see very oversold going into this major support level. So Natty does remind me very much of that. Sometimes these levels just take time to play out. But I think it is carving out a bottom, and I think this is actually kind of a gift here, if you ask me. Anyways, let's get over to ag here. Nothing's really changed here on DBC, just kind of a neutral to upside week here. Again, 22 is a good level, and 20 on the weekly time frames if we can get down there. Those are your support levels. Over to uranium, CCJ, lower this week, but didn't close above last week's, didn't close below last week's low. This one's still hanging in there, although URNM on the weaker side, again, didn't take out last week's low, but it didn't really do much either. Near term, you know, you got to get above, you got to get back above this trend line. If you do, you could make a case for a failed breakdown, but for right now, it is below that. UEC had a pretty good fall this week, and it did hit that 200-week moving average. So, and it got defended on volume. So we'll see what it can do here. You know, if you can get back above, we'll say 314, then you know you'd say, okay, this is a defense here, and it can go higher. But for right now, definitely under pressure. I'll be watching this going into next week. Watch that trend line there on URNM if it can get back up there. All right, over to the dollar index DXY. So dollar did lose this weekly inside bar here. So we have the green bar. We closed below that. I believe this is headed down to double bottom in that 100 moving average. That is going to be very good support there on the DXY. So we'll look for, you know, $100 and change somewhere in that area. That's where I think the dollar can get a nice bid. But for right now, I do think it is under a little bit of pressure. Gold here. So gold making new 52-week highs again, back above 2,000. Didn't close the week above 2,000, but pretty big move there. Obviously, all things considered, you know, up $200 in, you know, basically 2 weeks. And, you know, lots of things going on here. China reopening, that is spurring gold demand here. The only thing I have with gold right now is it's up on fear. It's up on kind of like, you know, obviously banking issues and so on and so forth. If that stuff gets sorted out and the market, you know, kind of gets its fears alleviated in the near term, I think you could see gold come in. And the issue I have right now is that I'm not seeing GDX confirm it. So GDX is closer to 52-week lows than it is to 52-week highs. If you had GDX making 52-week highs with gold, I would say this is definitely a legit move, and you want to be buying dips here. The only problem right now I have is that gold is up on fear and GDX isn't confirming. If you look back into September and October, you know, I said, look here, you have GDX is making a low, 1, 2, 3 higher lows. And I came on this channel and I said multiple times, GDX is leading here. You have a triple bottom on gold, and it actually had lower lows. But I said, look, GDX is making higher lows. That means smart money is accumulating. So right now, they were, you know, that was telling me that gold was going to put in a bottom. And I'd mentioned that was likely. Gold would get a bid. I'm not quite seeing that right now. That's the only issue I have with the metals right now. But they're holding up, and I can't rule it out. If we get more fear, then gold is probably going to go higher. That's really all I can say about it. I am watching this level here. It's going to be 1962, spot 50. And that is just a quarterly level. That's that quarterly high from 2021 that never got taken out. If you close the quarter above that, which will be this week, that changes a lot of things. If not, well, then you might have to do some more backing and filling. But for right now, that's the level I'm watching going into this Friday, to the end of quarter. Silver here holding up. Again, it got up to the 2350 area. Probably wants to go test that trend line again. It's a little overbought here in the near term, but again, SILJ closer to 52-week lows and 52-week highs. So something that I'm just kind of watching there. But, you know, I can't take anything away from silver. It's had a nice move off the lows. And again, it's still acting as a fear play. Platinum here also holding up well. I like this test candle on Friday. You have a daily inside bar. You're nicely inside of that. If this can firm up, this can make a run at 1040. That's about all the upside I see in it at the moment right now, but nothing terrible there. I think it's holding up decently well. Copper, on the other hand, again, back testing that $4, just getting above $4 actually. I think this still needs to go down and test 375, so nothing's really changed here. Still have lower highs. We went up into this red bar and pulled back on Friday. All right, so let's get over to Bitcoin, and then we'll wrap up here. So Bitcoin, you know, holding up nicely. Again, at this point, you're consolidating beneath this major resistance level. So this was a big level going back to 2021. You know, it was a failed bear flag. We broke through it in 2022 and then consolidated, and now we went lower. So it's getting tested again. It's not just going to break through that. I think, though, in the near term, or I would say before this tops, it probably wants to get to 30,000. And the reason why I say that is because that's how cycles tend to end. So you get like euphoria, and if you'll get euphoria, you'll get CNBC, you'll get all the Bloomberg, all that. If you get a close above even just a pierce of 30,000, like you won't be able to turn on Twitter without hearing Bitcoin 30K. That's where I would look to sell. That's where I would be a seller, as a trade. Still a lot of resistance up, especially if it gets up there and it's still overbought like it is. It is consolidating here, but here's a ton of supply. I mean, if we go to a weekly, that's 4 or 5 weeks and a lot of volume there too of bag holders that were buying here and got overtaken. They're going to turn into sellers. So you're not just going to break through that in 2 weeks. At least not, probabilities dictate that that's not the case. But for right now, Bitcoin's holding up. You do have a daily inside bar. It's holding up. I can't say anything wrong with it, but that's where I think it wants to go. Anyways, let's get over here, back over to the spiders really quick. So again, near term, again, we'll look at this. Monday's close will tell me a lot more. If we continue to the upside, then we probably want to go up and test this pivot. So we'll watch that on Monday. If we open and we have like a sideways to lower day, then you've got kind of a daily inside bar here, and you could set up to push down to that 383, 385 kind of area that we were talking about earlier. That's what I'm kind of biasing towards right now. But if we follow through to the upside and you get it back above this trend line here, then it probably wants to go test this pivot. And then maybe you can get up into the 405, 406 area there on the spiders. But lots of things going on right now, very headline-driven market. Central banks are scrambling around. So lots of things going on here. You got to stay nimble, got to stay on your toes, and don't get too, leveraged into one position here because, being nimble is key in this type of a market. It's been a grind here, right? Up, down, up, down, up, down. You don't want to get caught on the wrong side of a rally or a sell-off here. Anyways, guys, going to wrap up here. You guys take care. Come find Jason on Patreon. Come find me on carnivaltrades.com. I'll talk to you guys all next week.